Thank you for joining us today. I'm Greg Podolak, the managing partner of the Southeast office of Saxe, Doernberger, and Vita. Joining me today is Brian Clifford of counsel with the firm. SDV is a 25-year-old firm practicing exclusively in corporate insurance recovery and strategy for insurance policyholders. So within that niche of a discipline, we work with a wide variety of clients dealing with a wide variety of concerns. And Brian and I, who collaborate quite frequently for a number of different clients, have seen over really very acutely the last decade or so the emergence and very sort of nuanced discussion around the role and responsibility of cyber insurance. And we're seeing that be very routinely discussed and vetted and strategized with our clients in both the high net worth sector and specifically for private schools. And so we're pleased to be able to take a few minutes today to talk about the current landscape of that insurance market, what those insurance policies look like, where we see some of the trap falls, and and really what the future of analyzing that risk and strategizing that insurance recovery looks like for clients in this space. So with that, I'll pass over to Brian to kind of get the ball rolling, and we'll sink our teeth in.
Yeah, and I want to add to what Greg's already said, that I've been kind of looking forward to this conversation for a while because we have some unique backgrounds here. Greg has worked a lot in the world of cyber coverage and has a very deep knowledge of it. And I actually came from the private school world prior to practicing law. So we've got a unique insight that I think we can offer that not a lot of other firms can. So that's why I think this is going to be an interesting conversation for everybody. So we're going to start off just with a little bit of an understanding and context for what some of the pitfalls are and how acute the risks are. According to a recent study out of the University of Maryland, hackers attack every 39 seconds. In the world of employment and organizations, 17% of all sensitive files are actually accessible to all employees, presumably via cyber resources. 34% of data breaches involve internal actors, and during this the quarantine that we're all going through now, during its kind of lull in July and August of 2020, the average number of weekly cyber attacks in the educational context in the U.S. rose by 30%, just from the prior 2 months. So those are pretty stark numbers. Any organization should take notice of those, and I think what we're going to talk about today is really probably going to be, I'm hoping, a little bit of a wake-up call for what you need to do in order to protect yourself in the private or independent school environment in the area of cyber risk. So let's talk about what kind of risks a private school might face and how those risks are unique compared with other types of organizations. First, international exposure. And one thing about the private school world is that you have a really broad spectrum of what types of schools there are. I think a lot of people throughout the country think about private school and they think about their local Catholic school, and that's kind of it. But as you move across the country, there are high schools and primary schools that are international in their composition and in their objectives too, especially when you get into the Northeast, and I would imagine the West Coast too. The international component of private schools, both in terms of faculty and student body. It's really tough to match anywhere else. Most of the reason for that is because in New England, at least, a lot of private schools are boarding schools, and they're older institutions. They're sort of well known in the culture. We think about those schools as being sort of conservative, and we think about them in movies like Dead Poets Society and things like that. And a lot of people from around the world want to go to schools like that, and because they have boarding capacity, they can do that. And for a lot of private schools, that's very enticing to have an international student body for diversity reasons, and also for the reason that a lot of times those students they pay full tuition, and it's a good opportunity for all concerned, right? But there are some risks that go along with that, and one of the risks, of course, is that for tuition payments or fees payments, that money is wired to your school from overseas and from international banking institutions, from international servers in countries that may or may not be friendly with the United States. So there's an increased risk there. And, that's something to take into account when you look at your cyber coverage, you look at your cyber exposure to see whether or not that coverage extends internationally or globally. Remediation coverage is something that is, all entities face. If you have malware that makes its way onto your system, is your coverage going to pay to have it removed, right? Or is it just going to pay for the damage that's caused? Is that property damage, right? Phishing scams and social engineering, where somebody's posing as a vendor or even a constituent of your institution, and they're able to ask for a payment, right, to something that you think is legitimate, and then your finance department or your athletic department or something wires money to that entity that's posing as a friendly vendor. That's a very, very typical loss and risk, and it's something that is notoriously hard to find coverage for, the right coverage. And finally, ransomware. This is something that comes up in a lot of big organizations, where not just finances, but every electronic record keeping platform in the organization's in the organization, it is shut down by a bad actor, and you don't get the key to open it back up unless you pay a certain amount of money, right? That happens in private industry. I've heard it happens in law firms. It's a very real thing, and it's happening more and more. Obviously in the independent school or private school realm, it involves a lot of things. It involves grades. It involves medical records. It involves notes for teachers and curriculum, and archives. So it can be a big problem if you get lost, right?
If I could jump in for just
sure,
a second.
yeah.
And Brian and I, when we work through issues in this realm, and as you can already start to get a sense for, this is very much working in the coverage arena, is very much like trying to play at times 4-dimensional chess or put together a 4-dimensional puzzle. So there's a lot of moving parts, and we routinely bounce back and forth between talking about the substance of particular areas, right? How you define a coverage or define a risk, and process. Where does that definition actually fit into the process of understanding, the broader risk management and risk transfer strategies? And a note about the process for a moment, and I think I'm gonna do this by way of giving a little bit of historical perspective before Brian jumps into some of the third-party exposures. I think it's important to keep in mind that while we're going to talk about various different angles throughout the course of this program, most everything ties back to a few fundamental premises, and not the least of which is defining cyber risk, right? That's why we're kind of running through a basic framework to begin with, and we're giving a few common concepts to be thinking about, but there really is no substitute for having a conversation within your own organization with relevant constituents throughout the organization about the ways in which you face what we're broadly labeling as a cyber exposure. And I'm saying it that way and using my favorite air quotes because I think it happens all too often that people sort of fall into the trap of making assumptions about what a cyber risk is, what it is for their organization, and as a result, what the risk management strategy should be and what the insurance is intended to do as part of that risk management strategy. So much of everything we're talking about and we talk with our clients about on a regular basis stems from having a very thorough and detailed understanding of the definition of a cyber risk for your particular organization. And so how do you get that? I think it means whatever the makeup of your relevant decision-making body is, having robust conversations from the various different perspectives that inform the direction and the decision-making of the organization. So for instance, this is not purely an IT question, asking the head of information technology, what's our cyber risk? I need to know so I can go buy the insurance. It's not a risk management question or the response necessarily solely the responsibility of the individual who's charged with purchasing the insurance, which can sometimes be a treasurer or a CFO. It's really a multidisciplinary definition, and one that then eventually has to expand outside of that inner circle into conversations with risk management professionals that with whom the organization works, brokers, lawyers, because ultimately you're trying to identify what's going to drive a risk of exposure, a loss I may face, whether a first party out-of-pocket expense or some type of third-party liability exposure, another entity that has potential claims against me. What's going to drive that stemming from my network infrastructure, sort of broadly the best kind of broad way I can label it. And historically, I think a lot of people went through an evolution of trying to understand exactly what that means. Really, and it ramped up shortly after the Target data breach from about a decade ago, when it was highly publicized, that hackers had infiltrated Target's network and absconded with sensitive personal information. And a lot of industries saw that happen, and I think reacted by saying, yeah, I see that, but that's not really my issue. That seems like a tech issue. And I think as people have begun to really appreciate, network capabilities permeate what we do on a daily basis. So you have to think about, to some extent, your historical risk profile, those things that you've always been worried about could drive some exposure to the organization, and how they get exacerbated or the definition of them changes when you look at them in the context of that network infrastructure. How does that network now expose you in new ways to those same kinds of losses happening before? So Brian was talking a little bit before on the prior slide, about a few concepts, one of which I think is either baked in there or to a certain extent, maybe separate, but that's sensitive personal information, right? From one perspective, private institutions are the holders of certain sensitive personal information of their student body or others. If that's exposed potentially by way of some compromise of a network, let's say a hack, what are the costs associated with that? And how does that risk, now having been perpetrated by something that is technology based, as opposed to someone coming in, 50 years ago and rummaging through files, what does the profile of that kind of exposure look like nowadays? And at the end of the day, you have this definition so that you can better understand how your cyber insurance policy is designed to respond in the event that one of these risks emerges. And that becomes part of a broader discussion about how do we mitigate that risk in the first place? How do we try to avoid it happening and then only use the insurance as a backstop? And even further from there, how does that particular insurance policy play with other traditional insurance policies we have? So this is, kind of an initial deep dive to a certain extent on a key overarching concept, but I think it's important as we go along to continually be thinking about what we're trying to do is better define, better refine our understanding of what our own cyber risk is, so that when we look at the insurance we intend to place for it, that insurance policy, which is a contract and is going to be governed by very precise terms, best matches the exposure we've defined for ourselves.
Yeah, I mean, and Greg, would you say that is it a fair statement that as technology advances, and we all know the pace at which it advances, that there's exposures that are going to accompany that advance into areas where we previously never thought that there were real risk exposures. Is that fair to say? Because let's face it, nothing sort of keeps pace with technology, especially something as monolithic as the insurance industry.
No, I think that's right. I think that's been you've kind of pinpointed what's been a lot of the struggle in the insurance realm, both I think for carriers and for policyholders alike over the last decade. I mean, a good example, I work with a wide variety of companies in the construction industry, and you can take something as seemingly standard as a property damage claim involving a piece of equipment, let's say a crane, for instance. Well, a lot of equipment nowadays are outfitted with network-enabled controls, right? For those who are familiar with Internet of Things, IoT, right? The concept that you can look at your refrigerator, your microwave, that everything nowadays has some network capability. Well, what's the compromise of that network? If that leads to an otherwise standard risk, let's say that crane swinging into a building or collapsing in some way, you've got a much more complicated question than you've ever had before about what exactly that damage is. I mean, on the surface, it looks like your run-of-the-mill property damage claim, but now it's been occasioned by an event of some sort of breach of network capabilities. So does it then become a cyber risk? And what does that mean for the liabilities of the company that own that equipment? What does it mean for how the insurance responds? And that complication continues to evolve every single day. So I think you're right on, Brian, that this is it's a complicated, challenging question to answer in the here and now, and it's just as important to recognize that it's evolving as we speak. So you've got to really keep tabs on it from day to day.
Yeah, just to put a kind of even a finer point on your example, a property carrier may look at that and say, look, nothing went wrong with the crane. The crane did what it was supposed to do when it was directed by the computer, right, or the software that directed it to do it. There was no mistake there, right? But it's back somewhere further back, right, in the cyber realm where something happened, and who's to say that was actually an occurrence, that is an accident, right? If somebody purposely did it, now you're in the realm of something else, and that's where the complication arises. What policy is going to cover that? Right? So we're looking now at some third-party exposures that we want to just discuss, and again, we're trying to keep this sort of unique to private schools with some illustrations from other contexts, because cyber now is really affecting everybody, right? So third-party exposure, some of these are going to look rather stark and maybe even a little frightening. But first, the loss of personal identification and confidential information in the private school world is maybe even a little heightened because you have students who are coming from, you know, very wealthy backgrounds. Maybe there are celebrity students. This doesn't necessarily mean, you know, I put down their kidnapping risk, but it also means just exposure to people who want that information. You know, everybody is a journalist now, right? And everybody's sort of looking for their 15 minutes of fame on social media. And, you know, for the generation of humans who are much more skilled at handling technology than anybody from my generation, right? It's probably a lot easier to figure out how to hack into something that they want to hack into and get information that they don't have any business getting their hands on. But that exposes whoever is the caretaker of that information. That exposes the school, if it's keeping, which it is, medical records, you know, student transcripts, all of those things. So whether you're talking about an enthusiastic Daily Mail reporter or whether you're talking about some brand of cyberbullying, the institution that's supposed to be taking care of that information is going to be exposed to third-party liability for the student's information who's gotten exposed, right? To a certain extent, copyright infringement is also an issue. It's not maybe as expensive as one, but you know, it's something that happens as teachers and in the educational world, as more things are transferred via the internet. It's kind of easy to make that mistake where you're infringing copyright because you get something off of the internet, right? There was a time, and this is going back a long time ago, almost 20 years ago, where, and some of this I'll grant you is apocryphal, that high-end universities were being scrutinized by publishers for just copying textbook information and, you know, handing it out. So probably, you know, back then it was mimeograph or something like that. And because your Harvards and Yales and Oxfords, like they're more in the public eye, and you know, people all know what sort of institutions those are. They were being more scrutinized by people who had trademark copyright rights to information, and if they were found to have been distributing this without getting the proper permission, they were getting in trouble, right? That is easier to do now, and it's likely easier to detect now because of technology. So it's something that schools should be aware of. To a lesser extent, exposure and violation of employment agreements, that doesn't really have a cyber connection other than perhaps in connection with copyright and trademark. But I think the big thing that everybody's worried about now is the advent of cyberbullying, right? You know, we all know about this, right? We all see it in the news. We all see the documentaries of the various tragedies that arise in connection with bullying on social media. You know, if this is going on school networks or in connection with school events, then you're exposed, right? And you know, we know that the losses can be, you know, as high as it gets, right? When it comes to these types of exposures. So, you know, there's a unique type of problem with cyberbullying, not least of which, because it's a crime in some states, right? How do you cover for that, right? How do you find coverage if it's not accidental, if it's intentional, right? Another big problem to worry about with this is that, you know, now we're easily 20 some years into the internet, right? Statute of limitations in a lot of states when it comes to minor victims doesn't even begin to run until that victim turns 18, So if a minor has been cyber bullied in a state that recognizes that kind of statute of limitations rule, that statute of limitations isn't going to start to run until that student is graduated, right? So, even for something that's happened maybe years ago at your institution, just because that student's gone and nothing's happened, it doesn't mean that the exposure is no longer there. It is. And so you want to make sure that you've got the type of coverage that's going to address that, and it can really be complicated. So, Greg, any thoughts on that?
No, I think you've run the gamut there. I mean, I'm back to my kind of overarching consideration about being able to properly identify the risk, and this is a good structure for trying to do that. But it's, again, I think it's part of a more fulsome conversation with a lot of different fronts. Taking the temperature from different disciplines to see what that really looks like, and understanding, when an event is likely to arise, how that's most likely to be perpetrated and what that scenario looks like. Because as we're going to talk about, insurance policy interpretation in the United States is a creature of contract law. And so, the words that the policies choose to use matter. The grammar they choose to use matters. The punctuation they choose to use matters. So understanding in detail really what's going to be driving the risk can affect the appropriate language that gets used in a policy you ultimately purchase, to make sure that it best matches up on issues of defining key concepts, defining occurrence definitions, as you alluded to, Brian, defining what relevant causation triggers come into play in certain scenarios. So it's very much a devil in the details kind of analysis, and it's important to keep that in mind, as the market for these products is largely, if not exclusively, a manuscript. There aren't any standard cyber insurance forms that everybody gets. And for what we do, we learn everything, the guidance we give our clients, the strategies we develop for recovery, from the case law. That tells us how courts are going to interpret these contracts and apply them. And in certain other arenas, let's say if you're dealing with a commercial general liability policy that uses a lot of standard language, it's easier to predict from case to case how a court's going to deal with an issue. It becomes much more challenging in an environment like this, where most carriers are conceptually approaching the type of coverage they're providing in different ways, and then actually approaching it in different ways when they put pen to paper on the final policy. And that's what Brian's going to talk a little bit now as we get into some of the case law.
Yeah, and I just want to kind of add to that a little bit before we do that. In the example of cyberbullying, because you're dealing with different language and different policies, you also have in the school context, and especially in a private school context, where you may be dealing with different jurisdictions for any one event. You may have a victim in one state, a school in the other state, the perpetrator in a third state. It may be that any one of those jurisdictions, and the way they interpret the policy issue, has implications for how that's covered, right? So, that's something that's important to think about in terms of how complex this actually can get. And it can get complex very quickly depending on the occurrence or the event. What I provided this Metal Pro roofing case to kind of outline, and maybe it's hammering it home a little more than we have to, beating a dead horse, but how this cyber coverage gaps can occur and can very easily occur, right? The Metal Pro roofing case involved the hack of a business's bank account, right? And the hackers made away with $78,000 from this business's bank account, right?
And
when,
just to clarify
sure,
at the outset, Brian, this isn't actually a cyber policy product that was at issue here. This was a crime policy.
exactly, yeah, and the issue was yeah, exactly, it's a crime policy, and when the carrier denied coverage, right, the policyholder went back and countersued for fraud because the carrier in the quote for the policy represented that within the crime policy was coverage for quote unquote computer hacking, right? But then when you look, and I've got the language of it here, in what provisions of the crime policy actually applied, very clearly there's no coverage for computer hacking, right? And the court actually found that. In reviewing the policy, the court found, yeah, there's no coverage for this loss. However, on the claim, the counterclaim of the policyholder against the carrier for fraud, the court found, yeah, we're going to uphold that. That's right, because they represented that there was coverage for computer hacking there, and clearly there's not, right? So what does this mean? I mean, what does this ultimately kind of pertain to for us? Well, in a broad, almost kind of a cartoonish way, it's that there's not just coverage for hacking, right? There's not just coverage for cyber risk, as Greg has said. These types of risks are very unique, and they require very specific language that is tailored to your organization, your risk, your exposure. And again, because of the pace technology moves and changes, that's going to change on almost a yearly basis. So, it's probably a good idea to think about those things, not only once now, right? But, every year at renewal, to do a review of your organization, your exposures, what's happened in the world of technology, and see what you need to do to make sure that you're covered here. To sort of assist with that, we have a list here of typical cyber policy provisions, or this probably should be titled cyber risk provisions, right? And Greg, let's kind of go through these. I want you to kind of comment on them and what you see about them, what sort of problems you see. We don't have to spend too much time on it, but we've just kind of given a basic list here. But what is covered by some of these things?
Yeah, so I think you can get a pretty good feel just from perusing the list, and it is all stuff that is driven at what I would call kind of the core generic exposures that you see in the cyber realm, right? And so it's good to see for those who aren't necessarily getting into the granular of the policy. These are things to at least keep an eye out for, so that you know kind of conceptually whether the policy is intending to tackle them or not. And if you don't see them, it's good to be asking questions about where these kinds of coverages may or may not fit in, and whether and to what extent you should be thinking about a different product. But then, I think apropos of what we've been talking about so far, it also becomes important to understand the nuances of what it means. I think complacency in sort of accepting labels as having sufficiently addressed a particular realm of risk can be a dangerous thing. We talk about defined terms in insurance policies all the time. And on some level, I sort of always jokingly say, like, look, it doesn't matter what the ultimate label is, the term I put on something, the definition matters. I could call it a strawberry and define it as, as an occurrence. It's all in
Right.
that definition. The definition matters. And
to your point, I don't mean to interrupt, but to your point, like, so just having data breach coverage, right? Like, oh, okay, we got data breach coverage. We don't have to worry about that. What you're saying is no. That's not it at all, right?
Right. Yeah, exactly. It means understand, now you've got to peel the onion back a little bit more and understand, how is that carrier choosing to define data breach coverage, right? What does it talk about the scope of coverage, what that concept encompasses, what kinds of breaches, the causal relationship between certain events and those types of breaches, whether they're occasioned by internal or external forces, or something in between, right? So, that part is really the key here to my mind. This is a good framework, good kind of checklist to keep in mind, because these are the most common issues that everybody will see, and you'll want to be looking for them in some fashion. But then that's really the starting place for the dialogue about, how do we refine this to best match what our issues are.
Right. Right. Good. Um, I decided that it might be a good idea to sort of give an example of how the language is different in some of these manuscript policies, and how that can really kind of make a difference in whether or not you have coverage, and how difficult it is, because of the difference in language in policies, to find where the case law is going to be on that, right? One of the things that has cropped up, and if it's the nearest thing I've seen in my, your cyber experience is much more extensive than mine, but one of the things that I've found is that there is at least one kind of rule where there's a majority rule among the courts and a minority rule among the courts, and it comes to phishing, right? And phishing, what I mean by that, of course, is somebody who's posing as somebody. There's a lot of different variations of it, but especially where somebody poses as, for example, a vendor, and issues a fake invoice to a company asking for payment, right? And the company then getting this fake email or this fake invoice from somebody who's been able to imitate the vendor, right? They forward that payment to an account that has no business collecting money from the target entity, right? The cases come down a couple ways, right? Some say, look, yes, that's covered under this language that I've given a couple examples for here, because it involves the use of a computer, right? Whereas other courts say, no, it doesn't, because the bad actor's not using the computer to reach into the target or the victim entity's bank account and remove it electronically. They're using the computer to send a fake email or a fake invoice, and then it's the victim who voluntarily turns over that money, right, or transfers that money, right? So that's, there's kind of a rough agreement among the courts, but then when you actually go and look at the policies, you see that the language is similar, but it's different. So, in the one example here, this is actually pulled from a case, an actual case. The coverage grant is that the insurer will pay for loss or damage to money, securities, and other property, and those are all defined terms, resulting directly from the use of any computer. To fraudulently cause transfer of that property from inside a premises or banking premises, right? The other example is from a Hanover policy that we have reviewed, right? And in this case, the language is, we will pay for loss or damage to money, securities, and other property following and directly related to the use of any computer. So the highlighted language there is sort of the causation trigger, for lack of any better term. And you see that those are different. And I would say that the second example there, following and directly related to the use of any computer, that's kind of a broad causation language, right? It would suggest that falls within, or phishing would fall within that coverage grant, right? but that the first example, resulting directly from the use of any computer, that would tend to be a narrower causation trigger and would fall without. The reality of it is that in the case, there was coverage, right? So you can see that it's really, really difficult to pin down how the courts are going to respond to language like this when the language itself is not standard. And it becomes very difficult on the back end after there's been a loss to make those arguments when the case law is not going to be quite on point, right? So, it really does become more important then to scrutinize the language before and think about, all right, how are these risks going to be covered based on the language that's presented here? And, before the loss, if it's not going to fit the bill, go back to your broker, go back to the carrier and say, look, we need this endorsed another way.
And that's not to say that there's open-ended options for negotiating language, right? We recognize that as much as this is a realm of contract law, these aren't negotiated the same way that most other standard commercial contracts are. So sometimes your options to resolve issues you identify are going to be fairly limited by that dynamic. That may very well be, but at least at a minimum, then you understand going in the nature of the limitations of this particular element of the risk management equation, and perhaps it informs that there's got to be a better or refined strategy on some other element. And I think that's another piece that I talk about frequently with clients to not lose sight of as you get into the weeds on these kinds of things, right? It's critical to be able to scrutinize the meaning of resulting directly from the use of in this context and understand surgically how that's going to affect the outcome of a coverage case. But then, of course, you've also got to step back and say, okay, understanding that to its full capacity and perhaps realizing that I'm not going to be able to do much to negotiate a change there. Let me step back to the broader picture and say, when I'm worried about this particular risk, what other things can I be doing or should I be thinking about to mitigate it from ever happening, or to identify another risk transfer path if it should happen? Whether there may be vendors involved in a certain type of setup that could perpetrate this. Is there a way to place the burden of responsibility on those vendors or other parties? So I think it's important never to lose sight of that as we talk about some of these granular things. It's always nice to explore options to find better ways to craft the language to match the intent, which is really what we're trying to get at here, but it's not always the only solution.
Yeah, and part of it, if I understand you right, is that just knowing that the exposure is there and that it's not going to be covered by insurance, that in and of itself is valuable because there's other things you can do. This is a risk transfer process. It's not just a matter of do we have coverage so we can drive, that kind of thing. Right. Some exclusions, and we can talk kind of generally about other exclusions that might be out there, but I thought these were kind of fun examples for us in this type of thing because, again, it emphasizes the point that as technology develops, so there are cyber exposures for areas where we thought that there wouldn't be anything relevant to cyber, right? There's a few things here that are a German steel mill blast where somebody used phishing emails to log in. They were able to disrupt the control system and shut down this German steel plant. And we have some other examples of this here. I'm thinking in the realm of a private school. I went to a public high school. We had a single building, and I think there was a field house, right? But if you get in a private school realm, you're talking about a campus, and a campus has a plant, a physical plant, right? And the school that I taught at, they actually had a windmill, right? They produced their own power. When you get into very technologically refined and advanced physical plants, you're going to have exposures like this, where you run the risk of having actual tangible damage to property because of some glitch in a computer system. Is your first party property policy going to cover that, right? If it's traced back to a computer problem, because again, just like the crane example that Greg brought up, the carrier's argument is likely to be, well, it operated, the physical part of it operated exactly how it was supposed to. The computer told it, to shut down at this time, and that's what it did, right? All the electricity went off because the computer told it to do it. Nothing was wrong with the physical part. It's something in the computer glitch. All right, you have some kind of cyber-related coverage that's going to be able to cover that and respond to that. Anytime you have an update to your physical plant and it involves advanced technology or some new system, it's worth checking these things out and trying to figure out what associated risks there must be.
And I think it reinforces another, sort of critical point, which is as much as you're scrutinizing the cyber insurance product in and of itself, it can't be viewed in isolation. That many traditional lines of coverage still bear relevance in scenarios like this, and increasingly they are coming with limitations related to this cyber realm. So in a simple way, you got to make sure that those two policies talk to each other properly. That if the property policy is going to limit cyber risks and the cyber policy is going to limit property risks, that neither is more broad or narrow than the other. They've got to fit like a puzzle piece.
Right. Yeah, and that's something too that as we upgrades in technology, we think about, I talked before about a new system, but if you have an upgrade in technology, even a software upgrade, that could, theoretically create a problem. So again, frequent review, often, early and often is the right way to manage this type of risk. Another exclusion that we run into a lot, we run into it in all types of insurance coverage, are contractual liability exclusions. A lot of times you'll see in first party and third party, whether it's property or liability, carriers don't like to take on the risk that you've assumed. But the reality of it is in business and in the world of education, any place where there's contracts, there's always indemnification agreements. And as I've given some sort of cyber related indemnification agreements, if your school contracts out its IT services, if it uses cloud storage, if it employs any kind of vendors in software subscriptions, anything like that, there's going to be indemnification agreements connected with all those contracts. Does your coverage provide that coverage that you've agreed to, right? That is going to back up your promise to indemnify these vendors or the contractors. A lot of times it won't, and you have to check and make sure that those exclusions at least have some exception that's going to allow for those agreements to be covered. The one takeaway, I guess, there's state laws and regulations that we have to consider in these things, because when you're talking about medical records and you're talking about educational records and transcripts and things like that, a lot of those are regulated by state, federal, and local law. And some of those regulations may require certain kinds of insurance coverage. And I assume that there's going to be more as technology advances. So you want to also make sure in your review of your coverage that you've met those, lest you face penalties that are imposed by the government for not meeting them. But the more critical thing is something we've already touched on, is that technology is advancing faster than any of us can really keep up. There's an old thing that I read long ago when I started as an attorney, that however cutting edge your office is, your office automation and all the technology used to stay current, once the law profession has discovered it, it's already 10 years out of date, right? I would imagine that the case is probably similar for private schools, and any big traditional organization or profession is going to face this. We've already talked about how the insurance industry is itself monolithic and slow to change. So trying to keep up with the exposures that accompany the fast pace of technology, it's really critical. And this has to be policyholder driven, right? The industry is not going to do it for you. So, in order to be a good policyholder and to be sort of, an active and involved agent of the policyholder community, you really have to kind of push these things and push your brokers to try to get this coverage if you can, or identify what those risks are, because that's going to help the industry to keep up with the pace of technology, right? It's never going to happen altogether, because none of us can ever keep up with it. But keeping at least moving forward with it is going to save everybody in the policyholder community a lot of trouble. Some takeaways just to wrap up. Again, the lack of consistency in policies, because they're manuscript based, they tend not to be standard for these types of risks, creates a real problem. And then that problem is exacerbated by the way laws in various states interpret those policies. Your jurisdiction, it means something. And if you're, one of the considerations is you review your coverage is to think about what your jurisdiction allows in terms of coverage. How do what are the rules of policy interpretation in your jurisdiction? And that's something that a good coverage attorney like Greg can help you out with, right?
Don't discount yourself.
Unique risks, right? Again, think about your organization, right? This is one of the areas in insurance where it's not standard, so you've got a little bit of room to go with manuscript policies. But as Greg mentioned before, that's not the only way you manage risk. It's a full court press, so to speak. You want to make sure you've got your insurance. You want to make sure you've got other safety measures in play, indemnification agreements, contracts out with vendors that you may want to shift the risk to them. That's all something you can do. And go to a good coverage attorney to figure that out, to help you with, right? We've talked about policy review. I don't want to hammer that anymore, but this is an important area. It's something I think that, because of our backgrounds, we have a lot of interest in. I think we take a lot of pride in. We both have private school backgrounds, and we really have taken a real interest in this, and want to help those of you who want to know more about it. We want to educate you. We want to help you. So give us a call if you have any other questions. Greg, thanks for your great insights on this. This was a lot of fun.
Yeah, excellent conversation. And just to echo Brian's remarks, if you have any follow-up questions, please feel free to reach out to either one of us. Our contact information is going to be available. There's more information that you can find about this and other topics on our website, www.sdvlaw.com. We're really grateful that you chose to spend a couple of minutes with us today. Appreciate you letting us get our nerd on, so to speak, and dig into the weeds on this. So hopefully there are a couple of kindred spirits out there, and we appreciate your time.
Yeah, thanks. Oh, and by the way, group, there's also there's going to be some more of these private school oriented webinars in the future. But we thought this would be a great way to start it out, and so we look forward to seeing you and talking with you then. All right. Thanks again.